Reminder, we're running our annual course sale for the next few days. We've got 40% off all bundles and all individual courses. We'll put a link in the comments of this video, and it will be a webinar where I discussed the specifics about what the courses entail. Hey everyone, Charting Man Dan of the Chart Guys checking in on the markets today. We had a notable bull day out there with resistance breaks over the high of last week on both the S&P 500 and the NASDAQ. I've got up the daily time frame for the S&P 500. I am keeping an eye on this channel just in case this bull break were to lack follow through. And that's just because we closed below this resistance or closed right on that resistance with some end of the day hourly consolidation. Still holding hourly EMA 12, no major red flags. But again, whenever we have a bias in one direction in terms of price trend, I always want to keep an eye on the other direction. What would stand out as a bit of a red flag? But the simple statement to head into the morning was if the S&P 500 and the NASDAQ bulls hold hourly EMA 12, then they keep complete control. And so we held it and then saw a big move up. And then the hourly consolidation into the end of the day held it again as we hit 5-minute oversold conditions and started to bounce from that level. So in the short term overnight, hourly EMA 12 is our guide for full bull control. And we can see the NASDAQ broke a lot more convincingly. There's the NASDAQ. So here's the NASDAQ closing comparative to the resistance way over it. And again, the S&P 500 closing right at it. So a very big difference. We know QQQ divided by SPY continues to show us it is the NASDAQ leading the way on this bounce. We knew that we needed to see that as a part of a rally that we trusted. And Apple divided by QQQ continues to see its shift, although a little bit of profit taking in the end of the day started to weaken a bit there. We'll have to keep an eye on that. But overall, it's the NASDAQ leading the way up. And the clear sign for the bulls today was all major sectors hitting the high of the day at the same time. It happened within the first 15 minutes of the morning. And I attempted a little baby short attempt off the high of pre-market, just a little top fish, because again, my swing exposure is certainly on the long side and wanted a little position to protect in case we saw a 4-hour tightening range to start the week. And as soon as we broke that high of the day, I stopped out for something like a 12% day loser, so very low risk. But as soon as that happened, and as soon as I see all major bulls, all major sector bulls, QQQ, XLV, XLF, at the high of the day together, I know, don't fight this move. Doesn't matter if we're overbought on short-term RSI levels. Again, just have that automatic in your brain. If all major sectors are at the low of the day at the same time, don't look long. If they're all at the high of the day at the same time, don't look short. We know that there's going to be moves counter that eventually, but again, there were a lot of bears trying to short this move on the morning that were very frustrated. We had a 5-minute equilibrium, tighten up, and then break bull. When we finally rolled over, it was QQQ confirming the first 5-minute downtrend of the day. So if a bear waited for that and waited for the bear break of 289, they have, I mean, that can make the day for a bear. Pullback of 0.6% very quickly. And with the leveraged ETFs, that's a pullback of over 1.5% in less than an hour. It was also the hourly stair step. Hourly stair step bear break was 289.14. As soon as that happened, momentum shifted. Before that happened, bulls kept complete control. So what we're looking at from here, can we confirm? SPY 2-week inverse head and shoulders. We've got a daily uptrend as our guide. That resistance is coming into play. We're about 2.5% away from that level. And QQQ, weekly resistance coming into play. We are about 2.5% from that level. So it's going to get interesting. If we reject, it's all about the daily higher lows. Bulls have space where we don't have to just straight up break it from here. We can see a higher low as long as we keep holding daily EMA 12 and keep that uptrend healthy and strong. And again, we already have sectors, jets, the airline sector, already confirming the weekly inverse head and shoulders, and now the semiconductors. Daily bull flag confirmed, big volume, big follow through, weekly inverse head and shoulders. The semiconductors are at the highest level that they've been at in 5 months. And if we break 247.06, we'll be at the highest level that we've been at in 7 months. It's a notable shift underway. I'm also utilizing the 4-month time frame. 4-month higher low is set off EMA 12. The question that we have on names that look like this for the rest of the year, are we going to set a 4-hour lower high and tighten up, I should say 4-month lower high, and tighten up and see this turn into a year-long equilibrium? That's a possibility. We know the bulls are going to have to eventually confirm a monthly trend change. We know the dollar, still weak, still daily EMA 12. We know the dollar will eventually see a monthly bounce here. Zero sign of it. But when we see the dollar monthly bounce, we're going to look for names like the semiconductors to see some potential monthly consolidation. They then have to confirm the monthly uptrend if this move is going to turn all trends back to the bulls. Monthly, weekly, daily. Right now we got weekly, daily, hourly favoring the bulls. And it's just the monthly that is not at this point. There's also a possibility, and recently I talked about this but didn't want to confuse you all, but there's a possibility that we have to be watching for a monthly inverse head and shoulders in some of these names now. 247 on SMH, but if you look at the S&P 500, anything under, we could confirm this 2-week inverse head and shoulders, but if we do not break 432, we're then going to be watching for the potential of a monthly inverse head and shoulders to try and shape up. So again, that's looking down the road. We don't have to worry about that right now, but I know that that's in the back of my mind, and that's something I'm going to be keeping an eye out for into the end of Q1, start of Q2, 2023. But that's a little bit bigger picture here. So we're just going to be focused on the hourly uptrend. We know SPY is weaker than QQQ. And hourly and daily uptrend are our guides from here. NVDA, lead bull for the semiconductors. Huge move, huge follow through. I mean, this looks like a cup and handle. It's not a good one just because the right side of resistance was far away from the left side, but it sure is acting like it. Notable increasing bull volume. And again, just massive follow through here. Over 10% in 2 days. Hourly oversold conditions into 10% plus follow through. Certainly very strong. Again, 4-month time frame. Higher low is set. This is more convincing that a lower high is more likely compared to SMH. So again, on a lot of these charts, I'm watching for the potential that things get boring into the end of this year. Maybe we bounce for another few months. Maybe we pull back for a few months. Knowing that each of these candles is 4 months can take a long time to pull off one of those. And then, of course, the direction that tightening range breaks would be very critical for the markets as a whole. I kind of hope that happens. I know it will get really boring once we get real tight in there. But as far as clarity is concerned, it would be really nice to have 4-month equilibrium shape up into 2024. Tesla, nice follow through for the bulls. A lead bull pre-market. We've seen multiple times on this daily bounce where Tesla bulls have stood out pre-market and then they followed through for the entire rest of the day. So our new daily higher low support is down here at 124.31. We know we're in an area with a lack of clear resistance levels. We're looking at 148.47, 155.25. More than previous price levels, I care about weekly EMA 12, which is coming into play. We know we're coming from a waterfall drop. The waterfall drop broke at 118. We've already seen a nice 20% of follow through from that signal, but we do know that we need a weekly trend change, and we also know that earnings are on Wednesday, and earnings are either going to see notable follow through on this bounce or shape up that weekly lower high. Just one note, I entered a Microsoft swing in my IRA on Friday. First thing in the morning, as soon as that daily higher low was set, I enter a long position and I put my stop under 230. And the reason is looking for this daily inverse head and shoulders to confirm, but we've got earnings tomorrow and we got a triple top of daily resistance here. So not sure if I'm going to hold through earnings. It is a very small position size, so I can without too much significant risk. And again, it was looking for a 4-month higher low off EMA 12 to try and shape up. We're seeing some of the stronger names do it, watching to see can everything do it. And Microsoft has a lot more work to do, but they're getting the AI headlines. We've got this tightening weekly range that could continue to shape up. We'll see what earnings does. Healthcare sector, I'm watching this as a potential falling wedge because every time we break daily support, we get a multiple day bounce, which is the definition of a break with zero follow through. So just keeping an eye on this. And again, this sector is not really having an impact on the market right now because we haven't moved a whole lot over the last few weeks. Still a bear because it has daily lower highs. We are in a daily downtrend, but just no bear follow through. Big question for me the next 2 days, is XLF going to break daily resistance to see continuation over 36.17 like SPY and QQQ, or does it set a lower high and tighten up? So hourly support is going to be key to help us answer that question, which means 35.55 is a key support level for me to be watching tomorrow. If we lose that level, it increases the probability significantly that a daily lower high is shaping up. So again, bears, burden on bears short term here. And so bears have to prove to me some signs of weakness. And again, just going back to SPY, I know I keep pointing out this point, but SPY dropped notably for 2 days, never confirmed an hourly downtrend for the bears. We V-shape to higher highs for the bulls. We've seen this time and time again on the 5-minute time frames, and now we saw it on the hourly. Maybe someday we'll see it on the daily. IWM testing resistance as well, 188.96. We can easily distinguish individual names and sectors, names that broke the high last week and names that have not yet. So bears are going to be focused on the names that have not yet because there's resistance to play off of versus a clear bull break with follow through. So 188.96 is in play. 189.24 is right behind it. Again, it's the psychology of a cup and handle here, but we would need notable multiple days of follow through. Hourly uptrend is our guide. We have to lose the hourly uptrend if we're going to shape up a daily lower high. XBI, same deal. One of the weaker sectors today, fairly flat. Anything under 89.63, I would consider a lower high. And if we lose the hourly uptrend, key support of 86.63, if we lose that level, then we're going to look for a tightening daily range. Amazon's another name. Lori pointing out some dark pools, suggesting perhaps Mr. Bezos is selling some. Whatever the reason, you look at the rest of the tech sector, Google, breakout. Microsoft broke daily resistance. Apple broke daily resistance. Meta, daily bull flag confirmed. Lead bull. Remember back here? Remember when we had this bear break with zero follow through and that was a bull signal? The market was not strong at all. We had no confidence in the broader market at that point. And I was saying, Meta, I'm bullish Meta. I'm not bullish the NASDAQ, which is a tricky spot to be in. But Meta was showing us notable strength. It then traded sideways while the broader market recovered a little bit and then took off to get over weekly EMA 12 for the first time in a very long time. And it's been nothing but bulls since then. But anyways, all that, the point is Amazon is one of the only major QQQ names that has not broken the high of last week at this point. MARA, daily continuation for the crypto stocks. Again, still trading these in both directions. The bounce at the end of the day. Look at this 5-minute. Didn't quite get oversold, but we dipped down notably. And again, just the volatility is just beautiful. You got this kind of drop in a few hours, 7% drop into a 6% bounce. Something for everybody, bulls and bears alike. So strong close. Riot has a double top to be watching at 663. So it has not broken at this point. But those crypto names will remain strong as long as Bitcoin is holding for our EMA 12 support. And bulls are trying to round things off here to see another higher high overnight tonight. We'll see if they can pull that off. Cannabis names had a solid day today. So everybody trying to keep these daily uptrends going. Testing the high of last week after the daily higher low was set. AMC and these Reddit names keeping their bounce going as well. Keeping an eye out for a daily lower high. Again, if we do see any sign of weakness, I'm watching the names that are shaping up daily lower highs to be scouting a bearish entry. GME with a notable bull day today. 10% plus. So again, it's all the signs of a bull market out there. And I'm not saying we're in a bull market because there's still work to do on the longer term time frames. But what I mean by that is the technicals are responding, and the rotation, it's responding as it does in a bull market. And as we have not seen in a long time during the bear market. So again, you can call this, the biggest bear rally you've ever seen in your life. And maybe that's the case. The dollar will play a large part in that, in my opinion, if that's going to be the case. But sticking with price, sticking with technicals, and sticking with the burden being on bears. Gold staying strong as the dollar is not proving anything to the bulls at this point. EMA 12 support. Silver got the bear break, but bounce pretty notable. Very significant drop though. I mean, that was almost a 5% drop. And again, that's with no dollar strength and no gold weakness. Silver is still struggling like this. Lowest level hit in a month. Weekly EMA 12. That was initially my target for my short. And at this point, because it's just taken so long to play out, I'm just going to let it keep playing out. Maybe I'll move my stop to break even here at this point, but it's still healthy weekly consolidation. We're just keeping in mind that the dollar hasn't seen any kind of bounce yet. Oil, double top at the high of last week, 82.66. Daily bull flag trying to confirm. We would have to break 78.45 for there to be a red flag for the bulls here. Even if we fail resistance, just keep those higher lows going. Daily higher lows are going to be the name of the game here into February. Natural gas, all over the place. Trying to put in a bottom. 6% drop, 7% bounce. Need an hourly uptrend to get over 12-hour EMA 12 resistance. It looks like we're going to see it shape up here for the first time in over a month. 5 weeks since we've been over this EMA 12 resistance on the 12-hour time frame. So if we can confirm an hourly uptrend from here, then that will get this daily bounce going. And then we'll have to deal with daily EMA 12, but at least we can look at that and then say, okay, this is a shift. This is different than what we've seen in the last 5 weeks. Energy sector started strong today, but gave a lot of it back. It's got a bit of a double top. So in summary, the bulls win the start of the week. We're watching our hourly and daily uptrends. We are watching, if I want to look bearish, I'm looking at the names that did not break the high of last week. And I'm watching those names tomorrow, and I'm watching their hourly uptrends. We're watching to see how long the NASDAQ continues to lead the S&P 500 to the upside. And we're watching our earnings reactions. Next week will be, this week we got Microsoft, Tesla, but next week is all the big players in the tech space. And again, I'm leaving the door open for a possibility that the S&P 500 confirms the 2-week inverse head and shoulders bullish, but rejects from monthly resistance and then has to shape up the monthly inverse head and shoulders. But we'll take it one day at a time as always. Hope you're well. Hope you had a great weekend. Do good things. We'll see you tomorrow. We're in Canyonlands National Park, which is just a couple hours away from Arches National Park and near Moab in Utah. They're all fairly centralized as far as road trips go. So this is another great spot. Nice picture. But this is the kind of spot where it's so expansive and it's hard to believe your eyes when you're looking at it. It's almost like if you were an ant and someone took their hand and put it in some soft sand or some wet sand and left a hand imprint, and that's what you're looking at. Because you're up on this overlook and it's just this huge expanse in front of you, but there's these crazy rock formations where water has just carved away over millions of years and eroded. And you could definitely mistaken this for the Grand Canyon in some ways, blurry lizard friend, in a hole. That's a much better camouflage, dude. That's my National Geographic shot of the trip. Good camo. These are those handles, footholds and handholds carved into the sandstone just from usage from the Native Americans thousands of years ago. So really cool to see those still there and to see the paths that they walked on a daily basis. This is where a meteorite crashed, I believe, in the area. And And you can see all the different minerals and elements, and sand way different there where that crash took place. I want to say that they think this might be the one that took out the dinosaurs, but I don't remember correctly. Gonna have to double check that one, but just a really cool big drop down with some cool colors right off the side of Canyonlands. And there's the rivers carving their way through. And definitely the most epic sunset of the entire trip. Again, just not real. Up to the rocks, it looks real, and then it just looks like a big old painting like they used to do in older movies for backdrops. But yeah, you could watch that every day. There's your meditation. Just sit and watch the sunset for an hour every day. That's all you got to do. So, let's see, from there, camped there that night, and the campsite, as far as the park goes, is literally like, a walk away from this overlook. And there was a German family, fairly younger couple. They're probably in their early 40s, and they had a kid with them who was maybe 6 or so. And they were biking from Canada to Mexico. And this was maybe a third of the way there. And they didn't have a spot to camp, and it was just me by myself in my camp spot, and it was the designated sites in a developed camp spot. So they asked if they could join me, and I said, sure. So nice to meet people, as always. There are so many Europeans in our national parks. If you go in the summer to national parks, you're going to be looking at, 90%, maybe that's a lie, 80% Europeans, because the national park system is fairly world-renowned. And the United States, as far as what our government has done, I'd say if you have to mark up, top accomplishments, the national park system is definitely up there. So people come from all over the world. They have all different ethnicities and races, and, walking on popular trails, you hear multiple different languages spoken, and usually nice and very friendly people. And when you're walking on a trail, make eye contact with people and say hello. It's always awkward when you're just staring at the ground and intentionally avoiding eye contact. There's no reason to be afraid. You can smile at strangers. We'll see you tomorrow.